Hey guys, what's going on? Today is Sunday, February the 9th, 2020, and I just wanted to put a quick video. I've been talking to a few traders over the weekend, and what I'm discovering more and more is that a lot of traders really need some specifics about how to execute on some of the information that we provide in our videos in this channel. So today it's going to be a real treat because some of this information, guys, you only get in our paid courses. So I'm going to bring just a little bit of light, and I'm going to give you a specific strategy that is working right now that you're going to be able to apply to a few companies. They're going to be announcing earnings here this week, the week of February 10th through February 14th. Now we're going to go very slowly. We're going to break down some very, very specific details. So if you're trying to get better as an active day trader or swing trader, make sure you grab a pen and paper, and without any further ado, let's go. So right here, I'm going to guide you through a trade that we actually described in many videos last week. I'm going to show you specifically how you can use this information into being able to overlay it into this week's of trading. I'm going to show you live execution of the trade. And guys, we got a real treat. We actually got the first contest winner that we're going to announce. And I'm going to show you a quick breakdown of the trade that he has taken. So with that said, guys, focus here on the chart of RCL. This little blue lamp right here represents the earnings that RCL announced pre-market, before the market opened that day. In the video posted on February the 4th, okay, we've released this trade to our paid members, and then later in the day we've also made the video public on our channel, showing you a strategy of how when RCL, and this was the pre-market action before the market opened, we said it had very limited upside to go above 124. In other words, it might have gone to 123, 124, and then it was going to reverse. So with that information, the specific breakdown of the trade was buying 120 puts on RCL when it bounces to a level of 122, 124. Now, when you're typically looking at this chart after the company's actually announcing earnings, as a trader especially, if you're naturally bullish, this is not something that you would be interested in buying puts on, because what you're looking at is the price action. As you can see, there's no red candles here. They're pretty much all green, solid green action going on. You had prior couple of days going into the earnings report that was somewhat bullish as well. The stock was not falling, it was not dropping, it was going high overall. So looking at this, there's nothing inside of you that's going to be screaming to say, hey, buy some puts here. If you listen to the videos carefully, we've outlined, look, travel sector is highly bearish. We continue shorting the travel sector over the last few weeks, and we recommended shorting the bounce. So shorting the bounce literally means that when something bounces, okay, when it's already in a bearish pattern, okay, and you wouldn't know that this is in a bearish pattern unless you take a look at other time frame charts. So when something is already creating a bearish pattern, or it's creating signs of a top, it's creating a top information, in that case, it's a really good idea to short the bounce, because when things drop, they're going to drop much faster, which fits with our program, which is buying weekly options, and predominantly we'll buy them on the put side for that reason, that things drop much faster than they climb high. So take a picture of this, and I'm going to show you in a second how you're going to be able to use it this week. When we explain the trade, again, multiple time frames is key. When we explain the trade, we're showing you the daily chart of RACL, and we've identified this gap down with a bearish reversal candle. It's also a black candle, okay, which tells you there's a high probability of a reversal. And we said when the stock gets to this level right here, see it says EN entry. So you want to buy puts when it does this, which coincides with the same level. So right here it's 122.5, 122.6. Basically, the probability is going to close this gap is very, very small. The probability is going to reverse and go lower is very, very high. Now notice, when we say steer step, okay, you never go and you just risk your entire account at this point. Notice also as you're accumulating the position on this bounce, we also stated multiple exits, one being this first exit and one being this second exit. We actually hit that first target that day, but then in many videos after February 4th, in a couple of consecutive videos, we've also stated again that we continue to buy RSEL puts. This is the type of chart. If you see this, you want to pull the trigger on the bounce. Okay, so in other words, when you're looking at this part of the chart, okay, you don't necessarily want to be pulling the trigger here just because something is bouncing. Okay, see, there's a prior condition here on the chart, okay, that tells you, hey, that's the bounce you want to short. For example, you would have wanted to short this bounce because you got a quadratop formation, which we talk a lot about in our charts divergences course. So if you guys don't know all these little details, I'm not even sure how does somebody trade without understanding all these little things. And that's why taking charts divergences course, guys, if you're trying to be a better trader, it really makes sense to do so to make your life easier. So understand this. This is how it looks on a 1 day, 1 minute chart. And there's some companies that are going to be announcing earnings. So you're going to see this pre-market, especially when it happens on low volume. You want to pull the trigger, you want to buy puts. Okay, this is how it's going to look. The setup roughly is going to look. I'm going to show you a couple more examples here in just a sec. This is roughly how the setup is going to look on the daily chart. So you go to stockcharts.com and you pull something like this. You're going to see a gap down. When you're looking for multiple trades, you're going to see a bounce. You're going to see a reversal candle. It could be a black candle. It could be a red candle. But especially if it's a black candle, that's a really great indication that stuff is going to reverse. Okay, you want to target your entry when it's going to look like stuff is going higher. You're not going to want to buy puts because everything inside of you psychologically is going to tell you to not do it. You have to really just force yourself to take that entry. And naturally, it's not going to be comfortable. But that's why in many videos, I state get out of your comfort zone. Because when you condition yourself as a trader to get out of your comfort zone and you understand the setup and you understand why you're doing certain things, and when you lay this over along with the 13 market moves formula, good things happen. So check out the details of this trade right here. February 7th, 9:36 a.m. and we're fixing to close this RCL position. Yeah, as most of the people are just pulling the trigger on this, guys. We're making what, $6 grand on this thing. Okay, here's the deal. We're buying these. When we're buying this at 41 cents, we're about to sell these things at $3, guys. That's what is that? About 700% right here. So let's go ahead and pull this trigger on this trade. I'm going to go ahead and collect some gains here. Just as it hits the lows of the day, 111.80, we want to sell it, create closing order. We're going to sell all 23 of these right now, 305. See if we can get 3.45 on these. Buying them for 41 cents, guys. Okay, boom, sold up at 3.45, done. Now we want to sell these other ones real quick. What do we have? We're buying this one yesterday at 7 cents. And we're about to sell it for 1,100 times that. So basically we'll just sell it at market. Now notice I'm doing as the stock is actually going lower. Most of the people, that's when they actually trying to get in. Okay, 111. We're buying these at 11 cents. We're fixed to sell them at what? About 80 cents. That's another 800%er right here. So 2. Create closing order. Sell them at market. Okay, done. Sold. All right, if you guys don't know the 13 markets move formula, guys, this is your chance to learn it. Click the links below. Let's roll. So what we want to do, we want to buy some BKNG puts. We want to buy these BKNG 1915 put. We want to buy 40 of them at a $2. Let's see if we can get a quick fill here. Okay, so to summarize the trade, guys, initially we bought 23 contracts on that bounce right after the earnings report. Now notice this was a swing trade, actually capped it since February 4th, and I cashed it out on Friday. See, most of the traders, they don't have the patience to do so. Now, over the next couple of days, we added couple more positions to the trade in various strike prices on bounces. That's why we're able to buy them so cheap. Because when the stock bounced, it looked like, hey, the stock's probably not going to drop much lower. So it created some crazy returns, okay? But we didn't have to risk a bunch of money here. Overall, guys, if you add up all these trades, we have invested $972 and we cashed out at $8,158. Notice I didn't trade 1,000 contracts either. This is not a huge position. 23 contracts, 2 contracts, and 1. We're talking 26 contracts altogether. Now, the best one was the last entry, right? The last entry was actually the best entry because we were going into the Friday. That's how we were able to just buy the contract for 0.07. But we were able to do that and still had the conviction to actually keep adding more to the trade as we were going along because the chart kept deteriorating, because the probability of a further drop has gotten larger and larger. So when you see this kind of setup, it really makes sense to pull the trigger, guys. So this is what 5-day chart looks like on RCL. And the reason I'm showing you all this stuff, guys, so you could see, maybe you were considering this trade throughout the week, but maybe you jumped out, okay? Because look, when you were getting, if you followed everything in that 13 Market Moves daily video down to the T, what you would have seen is you would have gotten in right here. You wouldn't have been necessarily buying the 115 puts, but if you bought the 120s, you would have been $5.50 in the money by the end of the day. Okay, so these 120 puts would have gone, you would have doubled, tripled your money that same day. You could have used the same strategy when the stock bounced again. Notice it bounces precisely to that 120, just a bit over 120 level. And when it creates this solid downtrend of lower highs, that just gives you a very easy entry. Then it drops back again closer to that 116, 117 level. That could have been another easy 2-3 times the money trade. You could have done it one more time on the bounce. So this illustrates right here, guys, how you take advantage over these bounces. I've also shown you on many occasions how to, I've used the chart of BKNG showing you how it bounces, and you would typically get scared out of your position, but what you should be doing, you actually should be buying the position at that precise moment. So, and this is basically the stock unwinds and it drops all the way to the 110. We're actually selling the position, the video I just shown you right here. So we don't necessarily nail like the bottom right here. We're getting out right over here. So just before this bottom part fills. I've had a lot of questions lately. Okay, it's a really good idea if you swing trade in your position. If you're buying your position, let's say on Thursday, and you swing traded it into Friday, you really want to focus on this first 30 minutes while a lot of traders are actually getting in, buying puts. When they look at stuff actually dropping, what you want to be doing is you want to be selling. You want to be collecting your profits because if you would have just day traded this move, as you can see, once we cashed out of this, we got into BKNG puts using simple analogy that, hold on, this stock was already down 4% when we were selling it. BKNG was only down 1% so far, and so it represented a much greater opportunity for the rest of the day. But if you would have just stayed with this trade, right, and you would have focused on shorting this bounce right here, notice that, again, we had a gap down, the stock dropped, it bounced, this is your entry point. So what most of the traders do when they short stocks, they see the stuff is crashing, they see the stuff is dropping, they come in and they pull the trigger right here. So understanding what we mean by shorting the bounces, guys, there's 2 key things you need to understand is the levels. Okay, at which level are you going to short the bounce? Okay, and you got to understand what are your best moments intraday to actually cash in on the profit. So the closer towards the end of the week you get, your highest valuation on your option is going to be in the morning if stuff is dropping. Stuff is dropping quick like this, pre-market on a Friday. This is where your options are going to have their peak price between 9:30 and 10 o'clock. Stuff is going to bounce. You can buy the same options again for a substantially lower price, and you can repeat the trade. So short the bounces, short the day-to-day bounces, short the intraday bounces. If you understand that, you're going to do really, really well. Okay, now here's the day-to-day chart from Thursday to Friday. So here's a drop. Now, I know when you're watching the daily videos, when we go for some of these trades, guys, it doesn't seem like what is the big deal when something is dropping like $5, $10. Okay, but you just saw that a drop like this, it helps you turn 900 bucks into over 8,000. So most of the guys that I see are dealing with penny stocks, they don't understand this because they typically look at a stock that's incredibly cheap because the math is so simple. You're looking to maybe buy a penny stock for $4 and sell it for 6 or 8. And so when they're seeing this, they're like, okay, if I short this at 120 and I collect my money at 110, 111, hey, I'm only making $9 a share. But with a small account, I can't buy that. But understand, with options, it doesn't work like that. Every options helps you control 100 shares. So by utilizing the power of options, guys, you can have these insane, crazy returns that average traders, they simply don't understand. That this move right here can turn 900 bucks into $8,000. They simply don't get it because they just don't know any better. And guys, if you are not understanding something, then the best thing to do is to learn more about it. And that's why we got the courses to help you out. We're speaking of which, guys, I got 2 quick announcements to make. We are officially expanding, and we got a group of people that are handling phone calls. I know in the past, if you scheduled a call in regards to what course you should go with, any trading questions, I haven't been able to get to every caller. So I apologize about that. But if you go to Trading Options Live, click this button right here, schedule a call, you will get a 20-minute call with a live trader or representative of our company. So feel free to schedule a call, guys. I guarantee if you schedule it now, somebody will talk to you live. We've just been overwhelmed with calls, and I couldn't practically get to everyone, but we will now. Now, the second announcement, real quick, I wanted to make, we're running a contest for a free course giveaway each week. And the conditions are really simple. You got to post your trade in the comments in one of these YouTube videos each week, underline what stock you're trading, why you're taking the trade based off a market move or charge divergences, basically explain the why, the reasoning behind the trade. You got to state how much you're paying for the strike, how much you're cashing it out for, basically about 5 details you got to specify. So put that trade in the comments. Record a quick few-minute video about your trade and your results. Include a screenshot as a proof of trade. And just say a few words about the strategy and how you executed the trade, guys. Very simple stuff. This week, congratulations goes out to Mike. And here are the details on his trade.
Hey, what's up, guys? This is Mike. I want to make a short video here today regarding the 13 Market Moves channel and whether or not it actually works. So I did some trading on Friday, 2 days ago. I'm recording this on Sunday and was able to take about $2,600 into $7,200. I used the principles that are taught in this channel to make those gains. And I'm going to show you a little bit about how I did it and how I use some of the indicators and things like that that are talked about on the videos in order to make those returns. So first of all, we look at the general market. As we all know, there's some things going on with the Wuhan virus and market topping out and getting a little bit more volatile. What you can see here is, we had a top a week and a half ago. RSI was really high, and then we dropped a little bit down about the 50-day moving average, and then we made a new high up here, mostly through gap ups. But you can see the RSI didn't come up along with that, so that, to me, that's a divergence. I also see down here a second divergence where the volume is falling on these up days. And then finally, another divergence I notice is the accumulation distribution, which is pretty much flat throughout that entire process. So that gave me an indication that we were going to have a move 2, which is basically a gap down and then falling throughout the day. And that's what turned out to happen. So I just wanted to point out one other quick divergence, which would be in the VIX. So when we had our first all-time high here, we had a VIX way down at 12, and then now we have a second all-time high in the last couple weeks, and we're still up at a 15. So that means the market's not as calm or as it had been, or as confident as it had been, I should say, back when we made that first high. So one of the trades I took on Friday was BKNG. I really like trading BKNG on Fridays. Options come down so much in price that it makes it a great buy. So looking here, the RSI was really oversold, and it doesn't even get that low anywhere on the entire chart before that. Also seeing the accumulation distribution dropping off. And it sort of did what the SPY did, which is just gap up, gap up, gap up, and then kind of you see this little doji where it stalls out, and it did gap down and fall all day. So I was able to take advantage of that through a couple different strike prices. And I just wanted to note here, just the average trading range of the stock is $40 a day on average. So there's going to be some movement, which makes it great for Fridays. So with the move to, you see here, this is a intraday, just 5-minute chart. We fall in first thing out of the gate, kind of move along this moving average for a little while, and then we fall down. I was expecting us to land right about this line of support here at 1907. So here are the trades that I made. I kind of got in around, it looks like 9 o'clock. I'm in, or 8 o'clock rather, 8 to 9. I'm in Mountain Time, so adjust that to where you live. But what I thought was interesting is this is a chart of the 1920 put and the value of the put throughout the day. So you can see, even though it started out here and dropped all day, the put value in the middle of the day actually hit a low at 10 o'clock for me, like 2.5 hours into market. So you can see here, when I started buying in, I paid $3.50 at about this time, and then as it came down, I was stair-stepping in, and I was able to get them, just successively cheaper and cheaper and cheaper. And then as they started to rise up, I was able to make some really nice significant gains. You can see here, some of the fill prices, $3. I like to stay typically between like $1 and $3, or 50 cents and $3, depending on the stock. And then here I started to take some profits. I was stair-stepping out. And then I just had a couple at the end of the day here where I got up to $15. Being that this is the 1920 chart, this is something interesting. If you look here, this $12 execution I have at $12.15. Do you see how much higher that is? That's me right there. Look how much higher I am than all these other ones. And I've noticed in a lot of the 13 Market Moves videos, if you watch him live trade, Leo always has a sell price put in right away. And I mean, put in something crazy. He says that all the time. Just do something crazy. So one little bit of 13 Market Move wisdom here is to stair step in, stair step out. Okay. Another trade I took on Friday was LRCX. This was a little bit of a smaller trade for me, but ended up being very profitable. So I got in at, it looks like 9 o'clock, so somewhere right in here, as it looked like it was just going to kind of fall. It did do a little bit of this up and down. So I could have got in, I got in at 80 cents, which is about here. Could have gotten in for quite a bit cheaper had I timed it better, but I wasn't paying super close attention to this one. And I just threw out 250 on right when I bought them. I put that in there as a sell. I didn't even look at it again until the thing beeped and it just told me they were filled. And again, here, look at this. Way up here. There's a 1208. Look at how much higher I got filled than all these other people. But I just put it in. Try something crazy. You hear him say that in those live videos. Let's just do something crazy. And look what happens. It's awesome. Finally, the last trade I took was in Amazon. And I wanted to put this one in here because it did not turn out the way that I thought it was going to turn out. But I was still able to make a profit on it. So this is just really quick, a weekly chart of Amazon, and you can see it's in this nice little consolidation here with this top, and we do not expect it to break the top. Jeff Bezos was selling billions of dollars of stock last week, so I had actually expected it to do what the other two stocks had done, which is just to gap down and fall all day. Well, this is what we actually got. So it rocketed. I really wish I would have been on the call side in the mornings, to be honest. I did pick up one put right here because it looked to me like it might be reversing. And then I ended up getting a couple more over here as the indicators told me what to do. So this is something that I wanted to point out on an intraday chart. These charts were telling me that it was going to go up. You can see here as this is rising, this is rising, this is rising. They're all coming up, and that should have been a pretty good indication that that's what the stock was planning to do that day. But again, Amazon tends to sell off at the on Fridays at least a little bit. This is another stock with a $40 or so a day range. So up here, as this kind of petered out and it couldn't really get any higher, we kind of have a head and shoulders type thing going on here. I grabbed a couple puts up here and I sold the one that I bought initially for a loss because I knew it wasn't going to get all the way back down here. So I just bought those there. This yellow line is the VWAP. When it got around VWAP, I sold them. Again, not looking close enough at the indicators because I could have sold them for quite a bit more as it made this second drop at the end of the day. I think they went up. I sold them here $6-7. They went up, I think, to like 10 or something like that. So lost out on some profits there. So these indicators, they work on different time scales. They're great. I like the fact that we're not using tons of them, the moving averages, and these three indicators for the most part, and it really works. So that's 3 trades. I was able to take, like I said, 2,500, make it 7,200. So back to the question of the beginning, does it work? Yes, it absolutely works. It absolutely fucking works. So guys, I hope that helped you see a little bit of what you need to do. I want everyone to have a great 2020, trade like a rock star, and let's roll.
Hey guys, congratulations to Mike, and very awesome job. I love the way you explained every trade. And this right here, guys, actually proves that Mike is not a part of our paying membership, because if you were a part of the 13 market moves alerts in the daily videos, you would have known that despite of being bearish in the market, we actually send out the alert. Call alert at 10:50. Went out to all of our 13 market moves daily alert subscribers, okay, saying Amazon calls, 2,100 calls. Notice that message was sent out at 10:50. At that point, Amazon was trading about 2,073, and we said, look, there's about a $20-30 move higher from here. Okay, we did expect it to slightly go about 2,100, but that's exactly where Amazon reached on Friday. And at the time we sent the alert, they were $2. By the time Amazon got to 2,100, they were worth about $6.50. So quick 300%er on this particular trade. Now, the coolest part, I don't know if you guys noticed as he was explaining the video, there's a part of the video where he goes through the Amazon trade and he was able to short it. He actually picked the highest point on the Amazon intraday and he shorted it, and he made money on the put side despite of Amazon actually moving higher and despite of us actually being bullish on Amazon. Okay, so for those of you that may be watching a lot of these bearish videos that I've been placing here over the course of the last few months, and you wonder like, well, how's that possible that you can make money on puts? Guys, nothing goes higher, forever intraday. There's always bounces and drops and bounces and drops. Nothing falls in straight lines. So, this is a really good illustration that despite of a really bullish move on Amazon, he was able to cash in on the put side and make money. This is also a great illustration, guys, of someone that instead of whining, bitching, complaining, leaving negative comments, goes out there, studies all the information that we post on this channel absolutely for free, and goes out there and makes a killing. Makes more than what most of the traders don't make in a month, in one day, guys. And another point is, for those of you that don't work with big accounts, it doesn't matter if you got $100 in your account. If you got $300-$400, you can enter the contest. You will have the same fair opportunity because we judge the trades based off your reasoning. How do you describe how you get into those trades? Why did you do it? And the percentage returns. So it doesn't matter where you are right now. The only thing that matters, guys, is where are you going, and the opportunity is here for everyone that really wishes and wants to make it happen when it comes to becoming a better trader. So now let's get back to the part of the video where we're going to break down specifics on how to use the information we've shared with you so far into applying it and to trading it this week. How can you use this information to make money in the markets this week? There's a reason why I walked you so thoroughly through this example, because there's actually going to be a couple of really great opportunities you're going to be able to take advantage of this week. So first, though, let's look at how RCL looks now on the daily chart. And then let's see if there's anything else that looks like RCL chart before RCL actually made the drop. Let's see if we can find and identify a chart that resembles that pattern. Okay, it's very simple stuff here. And then, how can we apply it into trading earnings this week? So this is how RCL chart looks right now. And for those of you guys that have taken the charts divergence course, you understand that how easy this trade really was. You have the first black candle right here, you have another black candle and another black candle, and this one is a bear reversal candle. At some point, if you were looking at stock charts this day right here before the gap down here, this was also a black candle. Okay, so you pretty much got triple black candle action going on. Guys, if you're not familiar with black candles, we have an entire chapter in our charts divergence course to talk about this. And so it's a good indication that something like this could happen, okay? So look at this. The characteristic of this chart is the stock tops, we have a gap down. We're also making a bounce that results in this black bear reversal candle. Then we go lower again. We bounce again. It looks like we're finding support around this orange line, but that's not the case. And so I know as you're reviewing this trade, what's on your mind right now is, hey, when the market opens tomorrow, Leonardo, should I short this thing, man? Just tell me if it's going lower, okay? And so there is a lesson to be learned here. The lower it goes, the lower the probability it's going to keep going lower. Let me repeat that. The lower the stock goes, the lower becomes the probability that it's going to keep going lower. Okay, so with that said, remember when we first introduced the trade, our target price on this was what? If you were watching carefully, the first target price was 114.50. The second target price was around 107. So we still think the stock can easily make another leg lower, maybe to 107 area. If you look at this longer time frame chart, like can easily fall to like $100, $102. So there is still a little bit of room in the trade. But again, the way you make money with shorting stocks is you got to really time your entries and exits. So if you're buying this thing when it's dropping and then it's going to bounce against you, chances are you're going to have a stop loss that's going to get executed. You're going to get kicked out of your trade. Then you're going to jump in and you may have another unsuccessful entry. So be careful as stuff continues to drop. So now I'm going to show you a chart that characteristic-wise is going to highly resemble this. And you may be shocked what it is. Oh my God, no, it's not BKNG. Guys, yes, look at this. It's the same thing, but you have to understand where BKNG is in relation to where it could still be going, right? So the characteristic that we've talked about was what? It was the gap down, okay? Gap down, then bounce higher, and here's this reversal candle, followed by a move lower. If we go back to this chart, gap down, bounce, reversal candle, we get this move lower, then a couple of moves between 120 going back to 116, another attempt to go higher followed by a much bigger drop. So if you overlay this to this chart, where do you think BKNG can still go? Well, the answer is if this is the candle right here that coincides with this candle, and this is going to be repeated, then we could see BKNG substantially lower. We could see it at $1,700. Now, BKNG is not one of the companies that will be announcing earnings, but options will be slightly elevated on BKNG because actually Expedia will be announcing earnings on Thursday. So expect BKNG shares to actually mirror. It's a correlation type trade this coming week that starts tomorrow, February the 10th. So pay very close attention to BKNG shares after hours on Thursday. Okay, so that could be really worth a really solid swing trade from Thursday onto Friday again. Guys, opportunity just keeps presenting itself again and again. All you got to do is take action. Now, I promise you, I'm going to show you some really cool trades that, besides BKNG, that are actually reporting earnings. And so we're going to do a quick exercise, guys. I need you to type in real quick. I'm going to show you 3 charts. And I just want to gather an opinion from you real quick. Just type in 1, 2, or 3. The question is, between the next 3 charts, which one, based on the information I've shown you so far as the chart pattern, which one would you choose for a short? Chart number 1 is Marriott. Now, Marriott is not announcing earnings, but Hilton is. But right now, I just want you to focus on the chart. Would you short Marriott? Now, notice we're still focusing on the travel sector. So type in 1 if your chart is Marriott. Type in 2 if your chart is Hilton. Now, Hilton is actually announcing earnings on Tuesday. So type in 2 if this chart looks good for you for shorting. And type in 3 if Expedia chart looks like your favorite chart for shorting this week. So Expedia, here it is. You've got Hilton and you've got Marriott. Guys, take a moment, type in 1, 2, or 3. There is a reason why we're doing this. So here it is, guys. Based on the similarity of the chart that we've pointed out before, Marriott presents a better opportunity for shorting. So when would you actually buy the put? Okay, you want to time buying Marriott put when Hilton is reporting earnings, and you want to trade it exactly the way we've shown you. So ideal case scenario is Hilton actually moves higher after earnings. Okay, remember this RCL chart? When RCL announced earnings, it jumped higher on low volume, but then overall the chart pattern was highly bearish and started reversing. Right now, expect the stocks in the same sector to trade with the same type of behavior. So now that we identified this is the behavior, basically institutions, when stocks pop, they short the pops. That's what we want to do. Okay, and to draw it out, basically, your ideal entry could be if Hilton is reporting earnings. Yeah, you can short Hilton, okay, on the bounce, or what you could do is you can actually short Marriott, because Marriott options are not going to be as pricey as Hilton. Now, it's especially important since Hilton is announcing earnings on Tuesdays. You don't want to buy options ahead because clearly, first we're expecting a pop, then a drop. Okay, so first we're expecting a bounce, then we're expecting the bounce to reverse. So it wouldn't make sense to buy options before earnings. So you'd want to wait for the earnings announcements and then target the bounce, okay, based on a particular level on the chart. So that's the simple strategy. We're expecting the whole travel sector to continue this trend. So any other travel stock that would be reporting earnings this week, if you see a bounce at a key level, short it, an expectation of a reversal. Okay, and you can stair step into the trade and follow through multiple bounces after the earnings report, through the next few days. Now, the reason why, okay, we would actually take Marriott over, I just stated one reason, which was the cost of options. I've been spending a lot of videos, guys, talking about the cost of options. You make money when you control the cost of your options. You pay too much for your option, it goes sideways. It's not a good way to make money with directional options. So what do you see here? The reason why your number 1 choice out of these 3 charts should be Marriott, because it's still close to the top. Do you see, if you were to connect the dots, it's a downtrend, just like I showed you in the case of RCL. And notice what we got here. We got a black candle right here, guys, which was the identical setup, right? This was your gap down. You get bounce once, it drops, bounce to, forms a black candle, okay, just under the blue line. Okay, if it bounces, let's say if Marriott bounces while Hilton is announcing earnings as a result of a bounce in Hilton, okay, what you want to do is maybe come in at this 147 level, short it. Okay, now what happens if Hilton drops and Marriott drops? Well, they can easily end up right here. So that's not going to be as good of a trade, because then it's more of a catch-up trade. In other words, you already see stuff dropping. You're buying puts in the hopes that it's going to just continue dropping, which is going to inflate the cost of options. So you're not going to turn $900 into $8K like I was showing you with a live trade on RCL. So your ideal setup, you want for the bounce to reverse. That's how you make this killer returns, guys, with weekly options. So that's your top chart out of everything. Now, Marriott and Hilton, they don't move as much as BKNG clearly, so you got to really keep your strike prices in check. And if you guys want to know like the strike prices, all of this stuff we will be announcing in daily videos for our paying memberships. So all you got to do is go click the link below, sign up, and just take action. So when these daily videos come out, you're ready. All the details are going to be in them. Hilton chart also looks like a triple top. Ton of divergences going on, and it's set up really nicely for a drop as well. But Marriott is probably going to be doing a little bit better, especially on other areas outside of the chart. Marriott represents a lot more business overseas compared to Hilton, especially in areas that are now most impacted by the coronavirus. Expedia does not represent as great of an opportunity because it's already down so much. So see, the prior two charts, chart 1 and chart 2, they're already at the top. This case right here, the stock is already down quite a bit. Now, it does not mean that it's not going to continue down, but it already formed the death cross, already bounced off to the death cross. So it's not a bad area to come in because you got top 1, 2, 3. You got 3 top formation after the death cross and a gap down. That's not a bad area, especially if it bounces on low volume and then reverses. But your downside is kind of limited. Your downside is to maybe to $95. So could it bounce, let's say, to 115 and then reverse it, finish at 95? Yes, that wouldn't be a bad trade. But if it's already dropping automatically, let's say 100, your bond puts here, your downside is just not huge, maybe to 95 area. And look, Expedia has not dropped below 95 in like 4 years. So the probability of it dropping below 95, something real bad would need to happen. So from the perspective of a trade, you're much better off shorting stocks that are still closer to their tops, or they historically not hitting this really strong levels of support, which in this case is 95. Okay, guys, it's getting late on a Sunday, so if you want to schedule a call, don't forget, just go to tradingoptionslive.com, schedule the call button, get your questions answered about trading, about any course we got. If you want to get started with the program, just take action so you can make this year your best trading year ever. If you're interested in participating in the contest, okay, remember to record your trade, put it in the comments below any video, okay, and even if you have a small account, just start with what you have. Let's rock, guys. I wish everybody awesome trading week. I'll catch you on the next trade soon.